Hello, guys. Welcome back to another weekly outlook. This weekly outlook is from the 10th of the March to the 14th March, which is this coming week that we have. And in this weekly outlook, we'll be going almost over all the pairs that we trade, including forex pairs, some exotic pairs, indices, commodities. We'll look at a few cryptocurrencies as well, see what the charts are telling us, what we can anticipate for the coming week, and let's jump right into it. So as we can see, we are here looking at the red folder news events for the week, and as we can see on Monday, we don't really have any impactful red folder news events, and we can clearly see that here we have CPI release on Wednesday. That's the 8:30 a.m. news release according to the New York Times. And we have this job openings release tomorrow. That is also a very important 10 a.m. red folder news event. But what I'll be looking at is to more or less avoid Monday and Tuesday, because right before a CPI release, I have more or less experienced price to be consolidating or price to be in a range, a seek and destroy range. I'm not expecting a lot of movement on Monday or Tuesday. I am anticipating a lot of good expansive moves post the CPI release. Obviously, we have CAD news as well around the 10:30 and 9:45 a.m. mark on Wednesday. And Thursday looks like a pretty good day, filled with a lot of red folder impactful news events. Of course, we have the unemployment claims on Thursday, along with the PPI release, and we have a 10 a.m. news release on Friday as well, the consumer sentiment and the inflation expectations. So the plan is pretty laid out, pretty clear, to more or less avoid Mondays and Tuesday, and look afterwards of the CPI release for setups. We'll jump into the dollar index now. And as we can see on the monthly, we anticipated this proper deviation that we are seeing since the start of January. So nothing changes as per our macro level idea. Price has given us a deviation, moved back into the range. We have violated this monthly fair value gap. And if we go down on the weekly now, we're back inside the range well and truly. We have closed below this fair value gap. We have closed below all these bullish arrays that we could have expected a bounce from. So we've violated and flipped all these bullish arrays now. We have this will more or less act as a bearish breaker block at this point. We have seen a shift in structure on a weekly time frame, which is very strongly indicative of lower prices on the dollar index. On the daily, as we can see, price swept beautifully this. We had a very strong ranging week prior to the last week, and then price took out these highs here on Friday, and we saw good expansion, three continuous expansive candles, and you will more or less see after three strong expansion candles, you'll see price consolidating, price looking to engineer more liquidity if it is bound to go in the same direction as a bias. As we can see, we saw slow price action on Thursday and Friday, and I would expect price to range throughout Monday and Tuesday before seeing a more decisive move on Wednesday, aligning with the CPI news release. We go down on the 4 hourly now. As you can see, we saw very less expansion throughout the start of the year. We have seen more or less price consolidating in tight ranges. And one thing that you'll notice mostly in forex pairs, that the stronger the consolidation, the more reactive and the more big will be the expansion. And we saw here, just in 3 days, we saw a very good consecutive expansion. Those of you who capitalized on this move, very good for you. uh, Going towards the Euro USD chart now. Again, just the flip side. It more or less looks like the dollar index chart flipped, as we can see on the monthly. Again, proper deviation below these previous year lows, and price has now moved on, violated this fair value gap. On the weekly, again we saw very tight expansion throughout the start, from the start of this year, and then one single weekly candle, boom, we went to the upside with really strong volume and displacement, more or less setting the tone for the next 2 or 3 upcoming months, maybe for the next quarter at least. We'll see. Will I'll more or less have a bullish bias on the Euro USD chart, on the Euro now. As we can see, again, three continuous strong expanding candles, one bigger than the other continuously, and then we see some consolidation on Thursday and Friday. And the ideal scenario would be price has flipped all these bearish arrays. This will more or less act as a bullish breaker block at this point. This is an inverse fair value gap on the weekly, which is a very huge deal given you want to anticipate your lower time frame and intermediate time frame ideas in accordance with your higher time frame bias. So my higher time frame clearly tells me that I should be expecting prices higher according to my knowledge, and I want to resonate that higher time frame idea on the lower time frames. And exactly what I'm seeing here, small consolidation, I would be expecting nothing less than a few more days of consolidation before I see a good move, maybe a sweep of the lows, maybe a normal AMD model, a lot of accumulation I want to see. And if it comes to it, if it really happens that we've already seen Thursday and Friday showing us consolidating price action. If it comes to it, and if my anticipation is right, and if we have the entirety of Monday and Tuesday consolidating as well, accumulating as well, before we see a manipulation on Wednesday or post Wednesday after the CPI, then I'll be looking to get into longs. But before that, this is just me anticipating how price action might work, and will what will more or less get me interested into getting in a position in current market situations. Other than that, I am staying away from the market for the next few days, not trying to jump the gun, because the setup looks really nice. On the macro level, this weekly chart looks really nice. Very clearly, this has been a consolidation and a deviation, followed by a very strong expansive move to the upside. So I want to get into long positions, but I don't want to jump the gun and uh, violate my own trading rules and ideas. So, similar outlook on the pound chart. Again, on the weekly, we swept these lows inside this monthly order block, and this is a proper deviation. Price left behind a fair value gap here, as well as an inverse fair value gap, which was very beautifully respected by the weekly candles. It is so satisfying to see price action works so cleanly on high time frame ideas, particularly. on the daily. If we go down on the daily now, we can see this fair value gap and continuation of structure, sweep of the lows. This acts as a strong order block and a fair value gap in coherence with that order block. Price didn't come back to tap the order block, but it swept these lows and expanded, continued to expand, taking out these highs, this particular high. And if you zoom out and avoid all the noise, you can see a clear market maker buy model where you'll see in your initial consolidation here, your zones of distribution here and here. This is your reversal, or you can call it a smart money reversal. And these are your zones of accumulation and reaccumulation before price took out the initial consolidation. So, very beautifully, it has worked in accordance with our concepts and ideas, which goes to show how well these concepts, these accumulation, manipulation, distribution, and these market maker model concepts work, how cleanly they work on the higher time frame ideas. And the goal is to resonate our higher time frame ideas onto the intermediate time frame ideas for the narrative and the lower time frame ideas for the execution. Again, I don't expect price to come back to this order block. This is a very strong order block. We have a very strong low just because we swept this entire accumulation and this low, creating an order block, leaving behind an order block with such strong displacement and expansive candles. I don't expect price to retrace this entire move back because it would be, first of all, if it does, it would be really a pretty bearish scenario in my mind, and it looks very unlikely that it retraces back. I think this is what we should be looking at on the pound as well. Accumulation, a 4 5 day accumulation followed by a manipulation and a distribution leg would be the ideal scenario on both euro and pound for me. In accordance with DXY, maybe we get a SMT somewhere in between, which will just confirm, act as a confirmation on my idea. On the euro pound chart now, I don't trade this chart particularly, but it is a very good, it is very good to have reads on this chart, so you can actually identify which pair is the stronger pair. As we can clearly see, price has moved strongly upwards. We saw this sweep of these highs inside this bearish order block towards this external range lows. Again, we are applying all the similar concepts on all the charts we are analyzing or trying to anticipate the next tick of the candle. And similar concepts are being used on all the charts. I think Euro GBP chart is more or less important to understand, so you can maybe have an idea of which pair is the stronger pair to trade at this moment while the price was going down and both euro and geo were going up. Geo was the stronger pair to trade, as we saw more expansion in geo as compared to euro in this leg. But the previous week we saw a up move on the euro against pound chart, and we can clearly see here that euro dominated. We saw expansion on both the charts, expansion to the upside. But here you can see almost a 4% candle we saw last week on EU uh, as compared to 2.6 2.7% expansion, and it clearly reflected in this EU against the geo chart. EU clearly acted as the stronger pair, and What I'm really expecting is this high to be swept again. Until then, EU might just dominate the price action, might be the stronger pair to trade if the price goes higher. And in the wake of it, the euro, the price action on this particular chart, euro against the pound chart, might just sweep these highs before we see a move down towards the external range highs, external range lows, where the move down will clearly be more indicative of the pound taking over and acting as the more dominant pair. Then we have the 5-year yield, the 10-year yield, and the 30-year yield on bonds. I think these charts are more or less indicative of how we can anticipate reversals and moves on the pound, uh, on the dollar index. As we can see, we swept these particular lows on the weekly on both the 5 and the 10-year 10-year yields of the bond. But on 30-year, we clearly saw an SMT between the 30-year and the 10-year and the 5-year. And the SMT more or less works as the divergence here, more or less works as a confirmation of the reversal on the DXY chart, where we continue to see prices moving down lower. Obviously, the dollar and the bond yields are inversely correlated, and we saw a move down which was followed by, on a daily we'll be seeing it more clearly. We saw a move down which was followed by a push up, giving us a sweep of the lows and an SFP, a close above these lows, while the dollar continued to fall down, creating lower low. And yeah, um, on the USD JPY chart now, dollar against the yen, and we are again inside this monthly fair value gap, and for really bullish price action, we want to see price closing below these particular lows as well as below this bullish fair value gap. As on the weekly, we can see we closed below these lows. So on the macro level, our outlook towards the dollar against yen is pretty bearish, and we need to see some continuation. But in order to focus on the continuation part, we need to see some accumulation first before we see a push downwards. Again, we saw this particular gap acting as a fair value gap, inside which we swept these highs. Price continued to push down lower. Didn't successfully find a trade idea inside this leg, but on the higher time frame, our drawn liquidity was met very comfortably. I didn't want to jump the gun here as well because price already had taken out these lows before giving us this move, and just didn't want to get caught on the wrong side of my bias. But the bias worked out pretty well. Again, didn't really find a suitable trade idea, particularly inside the New York and the London trading session, because a lot of moves tend to happen, or a lot of times the drawn liquidity tends to be met inside the Asian session, which is more or less difficult for me to trade, particularly. And I personally don't have much experience, and neither do I have a lot of conviction in trading the Asian session. But yeah, but what we want to see on the what I personally want to see before the price continues to move down lower is again a few days of consolidation because the price has been constantly expanding down, even though it has retraced back, but quick retracements followed by expansion down. And what I want to see is price to get some rest, price to accumulate, price to engineer some liquidity, uh, take out some buyers from their positions, some buyers which held on to their positions from here or from here or trying to get into longs from here. I want to the price to engineer some liquidity around these highs at least, and this acting as a bearish 4-hour order block. What I really want to see, just a moment. Where's the draw icon? Yeah, sorry. So, what I really want to see is price to consolidate for a few days, give a deviation above these highs. This is where I want to enter. I want to see a change in order flow as well here before I enter. So a change in order flow to the bearish, maybe on the 1 hourly or on the 15 minute for the execution, and maybe that would be my trigger. But other than that, I want to again, I don't want to get into positions too early or get my stops too large. I don't want to enter a sell position here. Suppose enter a sell position. My stop loss is just too big for me to expect uh, any type of risk to reward, a good favorable risk to reward. What I really want to see if this pans out, and either on Wednesday or on Thursday, if something like this happens, something like this gives me the trigger, I can trim down my shots, keep my shots small, take profits early, aim for a simple 2 hour, while having the same mindset and the same drawn liquidity idea on the higher time frame. For the yen futures, I again have a very similar outlook. Uh, the higher time frame looks pretty gassed to me at this point. I think it really doesn't have. Sorry, the lower time frame looks very gassed to me at this point. It doesn't really have enough liquidity to just keep on going like this. Like, it just doesn't have enough engineered liquidity at this point. You need to see some consolidation and some taking out some positions, engineering some liquidity before it can move up higher. Obviously, I want both these ideas to work out coherently, or if not, maybe give me an SMT, which will be more or less a confirmative sign for me for my idea. But other than that, I really don't have a notion right now. I more or less I am anticipating prices, but I don't want to jump the gun and blame myself later for violating my own rules. Again, on this Australian dollar chart looks very clean to me, particularly on the weekly. We have a sweep of these lows and then we swept these lows again. So we have a double sweep which has worked out really well. We already got the shift in order flow on the weekly and on the daily. So the macro is still was the macro gave us a bullish indication very early, maybe half a month ago, around 13th or the 14th Feb. And since then, we have had 2 weeks, 2 or 3 weeks of good price action. Price went down, retraced very deep, and but yeah, our notion has still held strong. We want to see prices pushing above. I would have loved to see price push up here, push up from this particular point, from this inverse fair value gap, coinciding with this bullish breaker block, but price retraced pretty deep and has still held. Our strong low is still intact. Last week's price action again, we left behind a very big fair value gap, which has been retraced into. On Friday, price closed well and truly above the consequent encroachment level, which is the 50% of this particular fair value gap. This very fine line is the encroachment level, the 50% level. Price tapped into it and pushed on from it. I want to see price making a, a higher low at this point. So I want to see that staircase type of price action where price just continues to make higher lows and maybe then give us something. But yeah, really want to see price closing above these highs for a good indication that yeah, prices are still very bullish, because this might, on if you zoom out, this might just act as a lower low at this point. This might be a lower low. And again, I am anticipating. I can't predict. I can't make things happen. I can only anticipate and look for opportunities, wait for them till they come right into my lap. That might be the best trading advice I've received from someone. Is in other professions you might just have to go out of your way to make things happen, but while you're trading, you really need the opportunities to come right into your lap. You need to train your eyes to be able to anticipate all the moves, and you need to be able to understand that a trade not taken or a trade not rushed into is works as capital preservation as well. So similarly on the NZ chart, again we have the SMT of these lows. We swept these lows twice, so we had a double sweep here, but we had a SMT of these lows here. Obviously these lows are still intact, didn't get sweep, but since then this price action looks fairly more bullish as compared to the AU chart. But again, I want to see a higher high formation on this particular time frame as well. I want to see price closing above these highs before I can more confidently say that our prerogative for both the AO and NZ charts are bullish. I want to say that very confidently, but right now the price action looks pretty bleak. And on the GBP AU chart, the pound Aussie dollar chart, I think on the weekly as well, we have formed good higher highs. We've closed well and truly above these highs, leaving behind this particular order block coinciding with a range of this liquidity pool, liquidity void, fair value gap, whatever you might want to term it as. But again, as I said on the pound chart as well, that I don't see price retracing the entire move. There might be a huge possibility, as we can see on the daily here, that we have a small fair value gap here as well. And price has more or less stayed afloat, been above the just a moment, been above the encroachment level. What might get me interested is, again, all the charts are telling me the same story, to wait for more confirmative price action, some consolidation and AMD structure. Maybe we have some AU news in the Asian session as well later tonight, and we have pound news releases as well, so that could come in handy as well, particularly while trading pound and Aussie pairs, and you really need to time your anticipation and price action and align them with news releases as well, because that those are the particular time points or time frames, as like time particular time points which more or less shows influx of good volume. So you want to be trading where there is good influx of volume. And if you are looking for, suppose you're looking for a shift in structure here. So if you are looking for a shift in structure after a sweep of the lows or highs or whatever, like here we are if we are expecting sweep of these lows and these lows are swept, and I want to see a shift in structure with good displacement, good volume, then I need to be trading around the time, or I need to be looking for market structure shifts and changes in order flow around the times where there is good strong influx of volume. Otherwise we won't have good strong displacement leading to change in order flows, which might lead to fake outs, which might lead to some changes in order flow that might retrace deep back on us, or even just invalidate that change in order flow, particularly if there is no volume and conviction behind those moves. So on the USD CAD chart again, uh, very unlikely for me to trade. I haven't traded this chart in I don't know how long, maybe uh, 6, 7 months, maybe 8 months. I don't know, but same concepts we are using on the higher time frame. We see a sweep of these highs on the monthly, and not a very clean sweep, but on the daily we saw price continuing to shift down lower, giving us a change in order flow on the daily. So our macro is fairly bullish, fairly bearish. We left behind a bearish order block which was tapped into, and price needs to form a lower low from here. This particularly needs to act as a lower low, and on the 4 hour, again very small sweep. So when I'm looking for sweeps, particularly, I want to see a good sweep. Like this is a very small sweep. This is what I think 2 or 3 pip sweep of these previous highs, and might be enough. But what I really want to see is for me to be have strong conviction that this particular sweep is uh, good enough, and this particular area can act as a 4 hour order block, and price can consolidate here. Price can consolidate here fairly before giving us a sweep of these highs inside this 4 hour order block. I would want to see this happen, but if price fails to come down, suppose it goes up here and it comes down and it doesn't give me a good shift in order flow, and particularly goes to sweep these previous highs. So there are 2 or 3 possible scenarios. Again, the USD CAD price action is pretty dicey. It always is. It always has been for the past 5, 6 months, particularly to me. Maybe someone trading some different setup finds it more convenient to anticipate the price action and formulate their own trade ideas in this particular pair, but very tricky for me to anticipate it as well. I need to see a few confirmation signs and it particularly fitting my checklist, my rules, my strategy before I can even consider getting in a position here. On the CAD futures, flip side of what we see in the dollar CAD. Uh, on the monthly, we have swept these almost equal lows, and from there on the weekly we have. Bear in mind we are inside. I marked it out on the USD CAD chart as well, and on this as well, that we are inside a monthly fair value gap. Price has rejected well and truly from there once. Even if we go down to the USD CAD chart, we'll see we are inside a weekly fair value gap, and price is actively rejecting from that particular zone. So we need a strong close. We need a strong close under these particular lows for the macro to be truly bullish. And we need to invalidate this monthly, this weekly bullish fair value gap on the USD CAD. And we need to invalidate this monthly and weekly bearish fair value gap on the CAD futures coherently, simultaneously on both the charts, to be in a bit more comfortable position and having our bias set in stone per se. A similar outlook on both the charts. Again, we have a bleak, a very small sweep of these particular lows, from where I want to see either price consolidating here and moving towards higher prices. But I would be wary of trading this particular pair just because we are inside and well and truly rejecting from opposing arrays. Moving to the odd cat chart now. Odd cat chart looks pretty clean on the higher time frames. I think we are inside a weekly bullish order block where we have rejected from and swept the lows towards the start of this week, start of this year, my bad. This entirety of this particular area can act as a weekly order block. And now on the daily, we can see that this is a very tight range. This is a very tight month long, more than a month at this point range, and we've swept the lows here, and we have taken out these highs previously as well. And for the price to continue higher, obviously this candles like these rejecting from previous highs that you've had, both the previous highs, your local highs as well as the actual previous highs that you had, rejecting from them so strongly and closing below is not a really good strong sign. So what you want to see is price again forming a higher high here. You want to see something like this if you are expecting higher prices, or at least a sweep of these highs if you are expecting a higher low and then a lower low, like something like this, a higher low and then a lower low. If it comes to it, if this plays out, this particular high that would be formed would be a very strong high, supported by a lot of bearish arrays being formed in the price action along with it. So again, odd CAD in a very 50-50 situation right now. The exotic pairs are some exotic pairs move very beautifully for like a month or two in the entire year. So we just have to cherry pick from the list of maybe 20 or 30 odd exotic pairs that we have. We have to cherry pick and see what we really want to place our risks on, because exotic pairs can, even if their bias is set in stone and you feel you have the entire conviction in all, you have the strongest conviction and the belief in your ideas and in your bias and in your ideas, exotic pairs more or less move so unpredictably sometimes that it can shatter both your confidence and your bias in a instant, in like a matter of days or maybe weeks. This entire price action, which makes me feel that oddcad might push on higher, this price action has taken place across 117 days. If we stretch it out to current date, it's almost half a year, and it can completely switch the bias that you have had for like almost half a year in just an instant. Uh, Moving towards the indices now, I think indices have been very favorable, and I think I've had a lot of fun in trading indices the entirety of last year. But this year, since the start of this year, indices have either ranged or they have taken out the previous year highs that we formed in December and just plummeted from there. The case is similar on both NAS and SPX here. If we like look closely towards NAS, I think on the weekly, we've had a clear sweep of these highs. We have given a shift in order flow on the weekly as well, which is a very huge thing. I don't think we have seen a shift in order flow towards the bearish side on any indices in almost a year now. I think the last time we saw was 25th September 2023. October, my bad, 23rd October. But that also worked out as a deviation, particular deviation of this entire range, and price boomed on from there. But this is the first time we are seeing, and this was not really as bearish. This was like, what, maybe 8% retracement if you take this entire move. 11% retracement. If you look at these, we have seen that sort of retracement, 11%, almost 11% retracement in the last 3 weeks. This happened inside an accumulation of almost 4 5 months, and this has happened in the past 3 weeks, not even a month. So maybe we are seeing a shift in higher time frame paradigm on all the indices, and I had a lot of fun longing the indices the entirety of last year. But I think that we need to be more flexible in terms of positioning ourselves for both higher and lower prices at this point. And what I'm really seeing is on the weekly, we can see low resistance liquidity runs here. There are a lot of unmitigated lows, suspended lows, which were taken out just through this single move last week. And there are a few low resistance liquidity runs as well. I think we have flipped this order block, which was supporting this entire consolidation from the start of the year. And this particular order block will more or less be acting as a weekly bearish order block, which is a weekly bearish breaker block, which is a really big thing uh, in terms of if price takes support from this bearish RA, I think we can see strong retracement. Maybe what 6 7% retracement at least. Maybe we take out these lows. That's 15%, and a total of 25 26% retracement on the indices might be tragic for uh, a lot of people involved in the indice markets. But yeah, we'll trade every day as it comes to us. Again, we'll trade the setups that come directly in our lap and align with our biases as well as our rules and the setup. So on the daily, undecisive candles, but we are well and truly close below this low. We have closed below this entire consolidation, this 1.5 month, almost 2 months long consolidation. I think if we go down on the 4 hour chart, we have this two unmitigated equal low highs here inside a 4 hour order block, and these are again low resistance liquidity highs here, which can be very easily taken out inside. And what I really again want to see is price to consolidate a bit, move towards these particular highs, give me a sweep of these highs inside this order block, because I don't, if I'm expecting prices higher, I don't want to see price close above these two equal highs. I want price to sweep these equal highs and give me a push down lower, maybe give me a change in order flow on my execution time frames, my 15 minutes, my hourly, and then I can get in a position from somewhere here, and I can take shots, place my stops here. That would be the ideal trade scenario for me. But other than that, again, not jumping the gun is the rule, is the most important thing. And the more I say, the more I reassure myself to not do it, because yeah, I am a trader as well, and emotions take the best of me. I need to keep my emotions in line as well. That's very important while you're trading. That you need to preserve your capital, and more or less, it's important to risk your capital on ideas that you can truly and well and truly get behind. You can't just uh, be happy go lucky with all your ideas. You need to really have enough conviction in your own execution and your own ideas while you're actually getting into the markets and pressing those buttons, those buy and sell buttons. Again, on the SPX as well, we have a similar outlook. I think uh, we can call it a double sweep of the top. We've swept these highs twice, and I think price has again given us a shift in structure, a shift in order flow on the weekly, and price has taken out these lows previous week. The Friday candle took out these lows comfortably. Uh, the price action just doesn't look that convincing. Obviously, it would be, my bias for both the indices are very clear that I want to see some accumulation happen here as well. Again, we can see we have two almost equal highs on this indice as well, and I want to see accumulation, manipulation, and distribution on this as well. But I would definitely be preferring the NAS indice over the SPX. Oops. uh, gold is again Gold is again one of the more sorted charts, which seems very weird to say, but this time around I feel gold is one of those charts which give you more clarity relatively to the other charts at this particular point. We'll see how this week unfolds, but yeah, we have on the weekly we saw some accumulation. We saw price dive into this weekly bullish fair value gap, and we saw price rejecting right around the consequent encroachment level, the 50% level, and we saw the price close above this particular low on the weekly. If we zoom in, price well and truly closed above this low. So the fair value gap has The price has reacted very well off of the fair value gap. We can term it as a internal to external range liquidity move here. This is our internal range liquidity. Just a moment. We can underline this as the internal range to the external range liquidity move. This would be an ideal setup, an ideal scenario. I tried to get into longs here. From the sweep of these lows, I tried to get into longs. This acted as a 4-hour bullish order block, and the sweep of these lows tried to get into longs, but price has price showed a glimmer of expansion in the London session on Tuesday last week, but since then price has consolidated very tightly, and I took a position on Wednesday and I exited my position towards the Friday close because price just didn't move. Price didn't give me anything, and so what I want to see from gold now is maybe a sweep of these lows, and maybe we can get a double sweep here, and maybe we can have a sweep of these particular lows. If it comes out to be a double sweep, that would be the ideal setup. Price would be able to, I'm sorry, price would be able to consolidate here before giving a shift in order flow on the lower time frames. Maybe we can trade on the hourly, maybe on the 15-minute. Oops. And yeah, sorry, my recording just went out randomly, but we were discussing about the gold chart, and I think I made my idea pretty clear. Again, I trade a very simple setup. I trade a sweep of the lows inside an order block, which makes it more high probability, and I'm looking exactly for that, aligning my setup formation timing with news releases and kill zones like London session kill zone or New York session kill zone. And it's very simple thing that I am doing, but I am expecting, according to my probability, according to my hit rate, I am expecting almost 8 to 10 trades a month. And according to my hit rate, I am expecting 60% win rate. So 10 trades a month, you win 6 trades, you lose 4. 1% risked on each trade, for example, gives you 12% up plus 12% from the 6 trades that you won and minus 4 from the trades you lost. That's a net of 8% every month. Given on 1% you're risking every trade. Following all your setups, following all your ideas, following all your rules, and uh, check a concise checklist that you laid out for yourself. I think switching your ideas and switching your beliefs and switching your setups from time to time makes it very difficult for your brain to rewire constantly in every, let's say, 2 or 3 months, if you're even giving yourself that much time. But if you switch your biases every 2 or 3 months, if you switch your setups and your way of understanding the markets every 2 or 3 months, how will you gain the confidence to actually be able to back your own ideas? Because this is what you have to do. You have to believe in your ideas when you're entering any position. You don't want to get into the market without any with some sort of difficulty or like a lack of ease. You want to get into the markets with ease, and you want to enter that flow. You want to get into that zone. You want to just make the process easier for yourself. You don't have to complicate things and make it difficult. If you trade EMA crossovers, you can see I use it. I have EMA crossovers. I do use it. I trade. I look at volumes. Obviously, this I use to trade the SMC and ICT concepts. I use indicators. I believe in almost every concept that they work because you are a statistical gambler. You are not a genius who can anticipate everything and keep their win rates at 100% and win every hand. You're a statistical gambler. You're out here gambling your potential money that you are putting at risk. And you won't win every time. That's the harsh reality. You need to get used to taking losses, but still have that conviction and belief in your ideas, your anticipation, the setup that you're following. That across a sample size of maybe 10, maybe 20 trades, you will come out in positive. I give myself that reassurance every day by journaling, by keeping myself accountable, by noting down the trades that I've taken, the difficulties I faced, the problems that I created for my own self. But across a sample size of maybe 10 or 20 trades, or maybe if you want to time it, like across a sample size of trades that you took in a particular quarter, I say that this particular strategy gives me over 50% win rate. And any strategy with a 50% win rate will, like across 10 trades, it will give you at least 5% returns. And 5% returns is huge. Don't look at you getting 5% returns on suppose $1,000 account. That would be just maybe what, maybe $50, which is not a huge amount, but focus on increasing your capital, focus on getting funded, focus on uh, building that confidence and either getting funded or raising funds yourself or having someone back you. And 5% on $1 million capital is a very big number. Every month, it's a very big number. You'll be playing in the big leagues. If you can consistently get out 5% returns from your capital every month, you'll the the sky's the limit if you can do that. The only thing you have to control is your own self, your own mind, your own brain. That you need to stop. You need to reevaluate what you're doing right now, and you need to stop looking at the numbers. I always say that let time do the heavy lifting and just focus on the process. And this is why, because you need to just focus on the process. The moment you start focusing on the numbers, how price is moving, how many percentage, how much money you're making, how much percentage you're taking out, it will affect your mind. You are looking at the result when you haven't even crossed the finish line. How does that make sense? You're running in a marathon and you're trying to rank yourself that I finished in this particular place or this particular place, but the marathon hasn't even ended yet. How can you even rank yourself? That is going to hinder your progress every time you do it. So make sure to have a very strong mindset. Okay, back from the unnecessary yapping. I think my idea on gold is very clear. We might see this move pan out maybe today on Monday. Maybe it might take a few days. You never know. But because we have seen a consolidation the entire past week, so it might just be that the price doesn't accumulate more. The price just gives a manipulation move below these lows, giving us a double sweep, which would be an ideal setup for me. On the US oil chart now, on the weekly, I think we have swept these lows and just doesn't. I don't want to trade, particularly having my bias and my anticipation of price is obviously lower. I am expecting lower prices only, but I don't want to form a trade idea after the drawn liquidity has been met. As we go on the daily, the low here is 65.29 and the low here is 65.25. So merely it has swept the lows by maybe 4 pips, but I still don't want to uh, engage myself in a position where I might be stopped out. But if we see a potential accumulation here, followed by sweep, and towards these lows again, I mean, it is a possibility. Unless and until we don't see a shift in order flow on the 4 hour or on the 1 hour, not even on the 1 hour. I think on the 4 hour, 4 hour is way more important. I think unless and until we don't see a close above this high or this particular high, then we can anticipate lower prices. But again, in this particular market conditions, you really have to be wary of what you are really trading. Yeah, so on Bitcoin, I took a trade last week on Bitcoin. So Bitcoin has moved really a lot of volatility happening. I think we have seen a very big expansion and we went sub 80,000, which was absolutely insane. I think this is the longest, biggest wick I've ever seen on the on Bitcoin. I think this is the biggest wick ever I've seen, weekly wick. I think, yeah, my idea was basically to get into longs after I saw a 4 hour potential change in order flow. Just didn't have that much conviction because on the 3 hour, on the 3 day, I just scrolling through time frames, and on the 3 day time frame, which is very unlikely for me to look at, I just had this particular idea where we were inside a bearish order block and price acted very impulsively and then reacted very well off this particular position. I obviously took a buy position somewhere here around 86,000, I guess, and I was expecting something like this. Traded with half the risk, but I closed my position across the weekend because this was very indicative of how on the 4 hour, the as soon as we lost this low, if we had a sweep of this particular low, and then I would have maybe held on to my positions, looked for higher prices. But other than that, I think the close below this particular low was very indicative of me that we are going to take out this previous week low, and the weekly now looks very bleak, very difficult to trade. I think not difficult to trade per se, but very difficult for the bullish outlook. I think we have completed the sweep of these highs. I think we took out the previous year highs in accordance with. We can see a similar chart outlook on the SPX or on NAS. Like on NAS, we took out this mid December weekly high, which was our all time high as well. And we took that out in February. I think similar happened. Mid December high, we took it out towards the end of January. And since then, both Bitcoin and our indices have coherently bled and moved towards the downside. And I think if we are expecting lower prices on SPX and NAS and all the indices, I think Bitcoin might bleed really heavily. We might see a move down towards these lows, which would be absolutely catastrophic, to be honest. I think there is room for at least 20% more correction that would things are looking very tough. That would make it almost a 40% correction from the top, almost 45,000 correction, which would be absolutely insane. But for people who are actively trading, I think on the daily we are following the bearish order flow very beautifully. I think if we remove that, we remove the losses, we journal where we went wrong. I think I knew what risk I'm taking, and that's all you need to know. And now I think prices are following the bearish outlook pretty consistently. And if price breaks down from this particular low, if we get a close on the daily below this particular low, I think our next target would be around 67, 68,000 on Bitcoin. So that's all for today. Thank you for joining. Thank you for listening to me yap. Thank you for listening to me going over my anticipation and probable ideas for the coming week. And if you liked my ideas, if you resonated with my ideas, not only on the charts level, but if you resonated with any of my ideas on psychological level as well, please make sure to subscribe. Please make sure to leave a like and comment. Please make sure to comment if you have any tips on how I can make uh, my weekly outlooks or my content in general better, or if you want to see something different, please make sure to leave a comment down below. And till then, stay safe, happy trading, bye.